Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola, and Malaysian palm oil.
Hello and welcome. Before we start, I just want to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis, or on any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, Paris Rapeseed. Since the low in mid-March, with a V-bottom that spiked in a hammer pattern, we've seen prices for the most part very gradually try to move higher in what I initially thought might be a possible ascending triangle pattern, but which became an ascending wedge pattern. The lower trend line for both was the bright red mid-March to August uptrend, breached a number of times and repaired and breached properly again 3 weeks ago. It's currently 488.5. Whilst the upper trend line is the purple neckline extension, currently at 500.5, to the April to August 2024 head and shoulders top. Now earlier we'd had attempts higher and some good enough for me to consider targets above, which have since retired as prices chose instead to head overall lower. 2 weeks ago prices pierced, though did not close below the dark blue February 24 to date uptrend, currently at 470. I've since moved back up within a wide 472 to 484 congestion area. That's where we've moved up to. What became obvious since the breach lower is that what was once support is now again resistance, specifically the very close, bright green, very shallow neckline extension, currently 481.5 of the August to September 2024 head and shoulders top. The mauve medium moving average, currently 482.75, and I suppose also the green short medium moving average, currently at 483.75. This one capped the market from late July to early August, and did so far this week. So that all being said about the top size, worth pointing out that we also have something below, as I said 3 weeks ago, and I quote, "Further support below is now down at the congestion zone, which we have now entered between the bright green neckline extension above and the 50% Fibonacci line of the May 23 to January 25 move down at 467.25. So it's quite a wide support zone, but it's still there." End of quote. So there's a lot of pressure both above and below. All this prompted me 5 weeks ago to look at the downside targets. Thus, a primary target X2 is down at 462 even. Underneath the 50% Fibonacci line of the May 23 to January 25 move at 467.25, and just above the late April low at 461 even. We also have a secondary, much harder to reach target X3 down at 433.5. A target that seems very out of reach right now. This leads me to my final point, and is to wonder whether the whole May to day action might be a possible very scrappy head and shoulders top pattern. I'm not certain on this, but I have chosen to draw a bright pink neckline, which is currently at 465.25, for where I think the neckline might be for this pattern. So far, we have only had a brief foray lower than that neckline. I'm wondering if this is a genuine pattern or a genuine neckline. I'll just keep an eye on it and see how it develops for now. Winnipeg Canola. The key pattern is, and has been, fairly obvious here. It is the bright red late June to date bear channel, currently 631.60 to 685.90. However, the market has come down to some significant and possibly hardy supports. 2 weeks ago made a spike lower, down to level not seen since early April. However, it was not able to sustain the move down, pulling back up despite attempts midweek last week and again today to press lower. The reason for this pullback, or these pullbacks, is multifold, and all the supports are quite heavy hitters. These supports are the flatlining gold long moving average, currently at 659.70, which we are below at the moment, the 50% Fibonacci line for the whole 2025 action so far at 655.60, which we're just testing at the moment, and perhaps the least of these, the June 21 low at 655.90. Now, there is another pattern that might be developing, and is something I noted a few weeks ago, but I've not been able to really nail it down is to look at the whole mid-April today action as a possible complex head and shoulders top pattern. A really ragged one as well. Last week I looked for the 38.2% Fibonacci line at 665.70 as a proxy for a possible neckline, or maybe the 50% Fibonacci line for 2025. That is, until I can accurately draw one, which I don't feel comfortable in doing just yet. Plus, as we have not as yet let go of this Fibonacci line, the one that's the 50% Fibonacci line at 655 and change. As we've not let go of this Fibonacci line, I'm not looking at targets below, and I'm still open to looking at this action as a possible head and shoulders continuation pattern. That'll be one of the biggest ones I have ever seen if it was true. So for now, the action remains within the bright red bear channel, but keep an eye open in case we have a very complex head and shoulders top pattern as well. Bursa Malaysia crude palm oil. To start with, as I've done with for a number of months now, I'd look at the wide congestion that's overhead between 44.08 to 45.59. Last and this week we tried pushing up through this area, but with very limited success. This overhead resistance is not only resistance but longer term resistance. The overall move higher seen here all started with the drop down and support build up from the testing and breaching of the interesting neckline extension below, currently at 38.64, of the small late May to April 24 reverse head and shoulders bottom. I said 16 weeks ago about this neckline, and I quote, "This is one to watch on the downside, as it is the core of a very large April to September 2024 congestion zone stretching from roughly 3750 to 4100. End of quote. Importantly, it caused prices to move higher, and what turned out to be, as I said 10 weeks ago, and I quote, a possible, if imperfect, bright red ascending triangle pattern formed over May to date. It is a small pattern. I could regard the action as an attempted false break on the downside that so far has failed. End of quote. However, I gave both primary and secondary targets topside, and these duly were reached soon after. In that time, the market started to form what we can see is the core recent bullish pattern. Early May to date, bull channel, currently 43.18 to 45.73. Last week we saw an early attempt higher out of the bull channel, but this has failed. And the main pattern still remains. Indeed, what we have seen in the past as resistance, which is the gold long moving average, currently at 43.89, capping prices in July and mid-August, has yesterday and today become support and being tested support. The only issue, as I said last week, and I quote, above it all the way from the gold long moving average up to the dark blue neckline extension of the big old September 2015 to November 2017 head and shoulders top, currently at 45.90, is various layered congestions, though how good they are given past history may be up for debate. There is one other feature which I would like to discuss, and this came about because I was at the end of June speaking about it in a presentation at the Biofuels International Conference and Expo in Brussels, Belgium. It was and is to watch out for a key level now, from now until the end of this year, and that level is 35.99, so quite a way below the market, but still important. You see, if prices push down below 35.99 before the end of this year, which even now is still possible, then we would have set up the conditions here in palm oil to make that rarest of patterns an annual key reversal, with all the implications such a huge long-term pattern may bring. Please watch out for this, as it's important, and I will bring you more details should we get down below there, even though I know, as we are today, many hundreds of ringgits above it. Just bear it in mind, as we still have many months of this year to go.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.